Okay, so now that we've done our research, we've done our preparation, it's now all down to actually getting this down in a little bit more of a clear template so you can quickly revise exactly what you're expecting, exactly the previous language, and then also go over mentally the trades that you've got coming up. What action will it take to create a certain trade? This way you can visualize every trade coming up, and it alleviates any confusion, any hesitation when you actually come to trade the main event. So first up, I'd like to start with just get down the previous policy. This is exactly what happened previously, just so you've got that fresh in your head. So what happened last time? It was unchanged, just unch at 80 billion, and this was until March 2017. Now rates, as had been the case for a long time, totally unchanged. Now, what they did put in the previous statement is that they are going to benefit from staff projections, SEPs, staff economic projections. Also, they will possibly implement beyond March 2017. So that's therefore telling you from the previous statement that they said they were looking at the smooth implementation until and perhaps beyond March 2017. Now this is quite a standardized phrase from the ECB, so nothing too major, but certainly setting up, and the crucial thing was the benefit from the staff projections in December. So we know that December they're certainly going to be looking at more information, and in the past that has created some kind of movement. So expectations, rates, totally unchanged. No expectation of anything there. Stimulus, the broad consensus going into this meeting is plus 6 months. So that's going to take you out until September 17. Okay. Now, in terms of language, the way that it's released, as we've seen from previous, you're going to get a 1245 release. That's where you need to be looking out for the change. That's where any change is going to come, if any. And first up there, you're going to be looking at the extension and the size. So that's the area to be looking at. Size and duration first. So that's now giving us a sense of what we're expecting. Unchanged, 6 months potential extension. Therefore, that is the consensus. Anything less than or anything more than could potentially create a trade. Language-wise, 1245 is the time that we're likely to see this. Right, in terms of data, we looked at those charts coming through. The ECB at this period in time, not overly concerned with unemployment, so that's not coming into our heads too much. What we are still looking at is CPI, still below 1%, and it's pretty much flat for the year. So not great news on CPI. Therefore, any big change could be a bit of a surprise with the fact that CPI is flat. GDP generally has been up all year. So this is good news for the ECB. So we've got GDP up for the majority of the year. CPI, however, is still flat. So there we go. We're painting ourselves a little bit of a picture. They're the key things you want to take from it. Now, comments. Remember those source comments. First up, no announcement was the first comment. So we're not expecting anything here, or certainly no announcement on tapering. So any reduction in stimulus is going to be quite a big surprise, particularly based on what we've had from comments, not just the analysts' decisions or analysts' expectations. Next up as well, another possible opportunity for the ECB, they could change the capital key. Now remember, the capital key is how much they can purchase from each different nation based on their GDP, and also issue limit. meaning that they could buy more of a certain country's bonds. Remember, the issue was, or the worry was, that they were running out of German bonds to buy. And finally, they could drop the yield floor. Now, the yield floor meant that the ECB could not buy any bonds yielding below the deposit rate, which at the time, 0.4% negative. Therefore, remember the disparity between 2-year and 10-year German bonds. If they drop the yield floor, they would therefore be able to buy those 2-year bonds. So think about that for a trade. Now, in terms of this statement, what we're looking at is how things have changed. We know the majority of information is going to come at 12:45. What we're looking for in the statement is if there's any other areas that have changed. And this is all going to come about with the beginning of that statement. Now, remember, we looked at March 2016, January 2015, and it was all about the start. If at the start they begin by suggesting that they have conducted, we have conducted, this is going to give you a big clue that there's perhaps more to come, and then it's going to be a case of listening out as to what more is going to come. What has previously happened as well, they have listed the changes, and previously there have been 5 changes. Therefore, if they start with we have conducted, you then want to be listening out for what exactly has changed. Right, so we've got the information. These are the bits and pieces that we're going to be looking at on the left hand side. Next up is how we're going to trade, what we're going to be doing. First up, get your levels straight. We're going to be looking at the Bund. So levels to the upside, we've got 161.52, 161.79, 99, and then 162.15. This is giving us around about 100 ticks of range. Now, to the downside, it's a little bit trickier because of the fact that we've got a new contract. We don't actually have any levels really to the downside. So you're really looking at 160.92, 160.72, those previous 2 lows, and 160.54, that high volume node. So they're the levels that we're going to be looking at in both directions. The reason that you have these levels is if you are in a position, market's moving quite a lot, if you've got them written down, you can quickly glance over, see your levels, and then know whether you want to be holding on or looking to get out. If the market struggles, say at 54s on the downside, and doesn't drive straight the way through that level, perhaps you want to start taking a little bit off there. So think about all those different things, it makes thinking about those things a lot easier rather than jumping to your charts quickly, trying to move your charts around, trying to find levels. If you're not going to find them right in the heat of the moment, it's going to cause a bit of panic, a bit of rush, and the likelihood of either getting out of your trade too early or holding on to a trade that clearly has met a decent amount of support or resistance and is likely to start to turn. Alright, next up, action. This is the big thing. This is where you can pick your trades and know exactly what they're going to do. So, first up, they could cut the stimulus. What could they cut it to? 70? 60? 50? None of these are expected. No cut is expected. Therefore, any cut is going to be a sell in the Bund. Remember, we're going to be looking predominantly at the Bund. This particularly hawkish. So that's trade number 1. So that's first out. If you see that cut in stimulus, you know exactly what you're going to do. Are you going to sell this full size? Are you going to sell it all at market? That's what you've then got to decide. For me, on something like this, this is one where you do want to be having a go at trying to do it full size. Next up, capital key shift. What are we going to do there? Now remember, the capital key is based around how much ECB can buy of certain countries. Now, The reason that they're considering shifting the capital key is because they're running out of bonds to buy in Germany. So if they shift, they can then buy bonds from other countries. Therefore, the trade here is going to be sell Bund, German bonds, and likely buy BTPs, Italian bonds. Reason being, money is likely to flow into BTPs. They are rather liquid compared to many of the other European bonds and also much higher yielding. So this is hawkish and dovish depending upon what you're trading. Ultimately, it is more of a dovish move. However, depending upon what you're trading in this scenario, bunds or BTPs, it's going to be a hawkish or a dovish scenario. Now, increase the issuer limit. What will this do? This allows them to buy more bonds, and it allows them to buy more bonds of any countries, particularly that scarcity in Germany. And where are people likely to want to place their money? In the safest assets. So this is going to be another buy bunds. Also, it could mean that there's going to be more money coming into the markets, into predominantly German banks, so it could also be a buy stocks trade as well. Dovish move, that one from the ECB. Extend duration. So that's what we're expecting. So, depending upon how much, and this is a varied outcome trade, if it is more than 6 months, you have a trade. That is buy bunds. Also buy stocks, because QE is continuing. However, it's all then going to be down to, is it 6 months, is it 9, is it indefinite? And that's where the varied outcome element comes from. How much exactly are they going to do? So you've then got to start picking your trade on how much you're willing to buy of bunds or stocks, depending upon the outcome of this. If it's just 9, is it going to be that prolonged a trade? Are you going to be more benefited by getting in and getting out very quickly, as opposed to an indefinite increase, which is therefore adding much more stimulus and is likely to be more of a buy and hold situation? So dovish in any case. However, it's a situation of assessing quite how dovish it is. Next up, you've got the unchanged. Total unchanged means that they have done nothing. They have neither decreased asset purchases, however they've not announced an increase in duration. This initially would be a sell bunds, because the fear would be that they're not going to increase and they've only got one more meeting. However, there is always the likelihood of this coming back on the basis that they could still at the next meeting change. So this is more neutral, slightly hawkish comment. So again, that's where you then decide on the size that you're willing to go for on this trade. And finally, just going back to this comment on the yield floor, and a trade slightly away from what we're looking at trading, is if they drop that yield floor. And that is going to be a buy Schatz, which is German 2-year. Reason being, they can now buy them below the deposit floor. Schatz is currently trading around about the minus 0.8, 0.7 area, so they can then be bought. So this is dovish in terms of alleviating issues in the repo market. You could also see in this situation a small switching into selling bunds on this. So the trade would be to buy the Schatz and sell the bund, but that would most definitely be a spread trade. So finally, last things to be doing, you want to prioritize these trades. What are the trades here that you really want to have a go at? The trade that you're going to feel the most confident in, that you can visualize. I think that first trade, the clearest trade that is going to be very much an outlier, that you're not expecting, there's no expectations for it, is this trade here, the cutting in stimulus. That's going to be the big move. Next up, the increase in initial limit. Total opposite trade, very, very dovish. However, this is extremely unlikely. The ECB had already mentioned the difficulty in it. So that's a bit outlier. Next up, capital key shift. Again, this is quite a clear-cut trade and something that is potentially being talked about. Finally, you then got to assess the others. I'm going to cut out this final trade because the fact we're only really looking at the bund here. So it's the extending duration or the unchanged. Next up, I would say the unchanged. Again, you're moving down to the slightly more clear-cut trades, and then the extending duration. Because this is a varied outcome, because you're going to have to interpret this a little bit, that is, in a way, the fifth most important trade, certainly in terms of the risk that you're willing to take. So prioritize your trades in what you're going to look for. In terms of order that you're going to look for things, you are going to be looking at this first trade, followed by duration to start with. So slightly different if you look at the order that you're going to be looking at, but in terms of prioritizing those trades, you're certainly going to be looking at the cut in action. So that's how we'd look at it going in. You've got 5 trades there, you've got 5 scenarios, 5 things that you can visualize, you can run over in your head before the moment, and then when it comes along, you know exactly what you're going to do in terms of a trade, whether that is selling bunds, whether that's buying BTPs, buying stocks. You'll know exactly the size that you want to do, the prices that you're willing to get in at, and also, to a degree, how far you feel it might go. At least you've got some levels, as you've noted down, that you can start targeting to the up and the downside in either scenario. So that's how you want to be looking to template going into a central bank decision. Clears your mind, gets you ready for it, and alleviates any hesitation coming into the numbers. So let's go and have a look at exactly what happened. We'll have a little look at video. We will briefly comment on the euro as well, because we did have those charts up previously. So a brief comment on the euro, but also majority spent looking at the bund and how that reacted and which one of these scenarios you could have actually traded. Alright, let's go and have a look at that video.